Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at a report from Headset on monthly sales. That's going to cover California, Colorado, Nevada, and Washington, maybe a little bit of Canada this month, as well as Illinois and Massachusetts and Oregon. So August was a good month for every state, very much needed in terms of a rebound. So if you take out April with the 420 boost, you can see that it's just a gradual step up, which is good for the overall market. We saw some states decline, a lot of them that require tourism, like Nevada is finally starting to see a rebound as it hit its trough in May and is starting to rebound, getting a nice little V recovery. Washington State, stair-step pattern kind of going up. California is just kind of more of a natural 45-degree angle climb. And so getting into some of the numbers with the total sales, California saw 348 million. That's a 6.5% increase from July. Colorado, they had a 27% increase. They saw 176 million, which was a nice little pop for Colorado. So I'm not sure if that's an increase in tourism or a decrease in sales price, or just maybe everyone's kind of coming out of the woodworks buying, but that was a much needed pop for Colorado. Moving on to Nevada, they saw 56 million in sales, not very much, but more than the previous month by almost 13%. Washington still relatively flat month over month, saw 121 million, but Washington State was fairly unaffected by the pandemic. We don't have the tourism. And so all in all, it's been about a 10% pop. In fact, you can see from 420 that we're still hovering about those same numbers, which for 420, it increases April's sales by 10%. And yet we're still hovering at those same numbers. So it looks good. So Canada's total sales, we saw 46 million in Alberta, 30 million in British Columbia, and then Illinois, relatively new recreational market, 88.9 million. Massachusetts saw 73 million and Oregon at 93 million. Not bad. Looking at year over year sales for California, 33% increase in sales, 29% for Colorado. Nevada's improving by 5%, but their sales are still down by about 23% from last year. Washington's cruising along. They're doing it about 24% year over year sales increase. And our friends up north in Canada, Alberta and British Columbia, all seeing about 117% increase. Illinois, fairly new market, 300%, not abnormal. And Massachusetts at 61%. I'm wondering if the vape pen market out there is still fairly low, or what the deal is, maybe just a lack of storefronts. That's a fairly low number. Oregon, 42% year over year sales growth. So the average basket size is still hovering around normal, I would say. I mean, there's some increases you can see from the graph, especially Nevada saw a huge pop. But $70 on average for California on the average basket amount that people are buying. Colorado seeing $66, Nevada $73. Washington is down at $34. So we haven't been that high, never have been. And so we're still steady. I think that's because there's so many stores that we don't have to go very far. We buy when we need and really don't have to hoard it like we're seeing in maybe California or even Nevada that's buying more, and then they don't have to go out as much. Looks like BC and Oregon is kind of on pace with Washington at lower dollar amounts, around $42, $43 for Oregon, whereas Illinois and Massachusetts, that might just be a new market and everyone wants to go out and explore. So they're spending $123 on average in Illinois and $104 on average in Massachusetts. So that could be from hoarding. That could be because they want to buy everything and try it out. And then we're going to wrap up with brand concentration. So there's a reduction in brand concentration, which is an interesting concept because you would think that as time moved on, less and less companies would be around, especially during this pandemic. They just kind of go out of business. And yet we're not really seeing that. So increased competition, possibly. So as the top 10 brands have a reduction in concentration, could be that new brands are coming out, or maybe a change in purchasing behavior towards cheaper brands. But regardless, it looks like the behavioral change is happening with consumers right now, either being impacted by disposable income or new options. And then looking at this metric of count of baskets, which is the revenue divided by the number of transactions, you can see there's a lot more revenue going into California per transaction than Illinois or Massachusetts, by about 5 times as much, and twice as much as over Colorado. So California's basket count is 4.9%, been pretty average. Colorado popped up to 2.6 and Nevada at 0.7. So not a lot of money being spent down in Nevada per transaction. So maybe they're just buying cheap pre-rolls. Now, Washington State, they love their pre-rolls too, but they're buying that at 3.5. Now, we also love our concentrates, which are very, very pricey. So that could be the reason why that's a high number as well. I know California likes their concentrates, and pretty much everybody does too. Maybe edibles are new up in Alberta and British Columbia, and they're not expensive. And that's bringing that basket count to 1.1. Illinois, Massachusetts at 0.7, and Oregon at 2.1. So definitely California leading the way in terms of revenue per transaction, with Nevada kind of being down there at the very bottom. So we'll come back in a couple of weeks and take a look at what September is doing and seeing how sales in these particular markets are flowing. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.